What is the difference between an IPO and an NFO? Many participants have asked me this question across my workshops and of course on my YouTube channel. So let's discuss this, the difference between an IPO and an NFO, and what are the major points to be noted if you're an analyst working in a research firm. Hello everybody, I'm your learning partner Sushila Hariharan, and if you're interested in a career in investment banking, hedge fund accounting, trade life cycle and OTC derivatives, you've come to the right channel, because here we discuss extensively topics on these matters. The first things, both an IPO and an NFO are public issuances. That means it is not meant only for institutional investors, it's not a private placement, it is meant for public retail participation. So that's your first point of similarity. So what's the difference then? The difference is that an IPO is issued by a corporate, by a limited company, whereas a NFO is issued by a mutual fund. Okay, so the issuer is very important to understand over here. So the first point of distinction is that an IPO is issued by a company, whereas an NFO is issued by a mutual fund. Okay, the second point of difference is, in an IPO the company can charge any kind of premium that they want over and above the par value. The par value, as we already know, is the value at which we call it as a base value or a nominal value. And many companies do an IPO at prices that are way more than the par value. This is called as a premium account, especially when there is a high demand for stocks in the market and there's a crazy bull run that's happening in the markets. Companies can charge any amount of premium. So in a IPO, the company normally issues the stock at a par value plus the share premium. But in the case of an NFO, most often I have seen that the units are issued at the face value only. So then the face value in NFOs is normally 10 rupees of almost all units that I have seen, or $1 in the case of the US markets. But in the case of Indian markets, the face value of the stock that's being issued in an IPO can be anything like 1 rupee, 2 rupees, 5 rupees, 10 rupees. There are different denominations as mentioned by SEBI. That's the stock market regulator. So the first point of difference is who is the issuer. The second point of difference is at what price is the units or the shares issued at. The third point of difference is the IPO normally is for a very short period of time. Typically from the IPO opening date to the IPO closing date, everything is done. And extending to the allotment of units, allotment of shares, everything is done in a very short and a crisp period, typically in between 10 to 12 days. But in the case of an NFO, the NFO stays open for as long as 30, 35 days, as long as they can get subscriptions to the NFO. So there is a duration that is timed for how long the IPO can be opened or how long the NFO can be used for, or can be available for subscription. The fourth point of distinction between IPO and NFO is, what does the company do in the case of oversubscription? Okay, now when a company has issued, let's say, shares worth 1 crore, but it has received bids for shares worth 2 crores, okay, double, what do then? That is where there is a big distinction between an IPO and an NFO. In an IPO, the shares there's a share issuances that have been oversubscribed for. That means there is X number of shares, but there is 2x or 1.5x or 1.2x times the number of shares that are available for allotment. In this case, the company allots the shares on a pro rata basis. That means how much ever is the oversubscription, accordingly the company will then allot that many lesser number of shares. All right. What happens in the case of an NFO? If an NFO receives oversubscription of this quantity, that means the fund manager is a real rock star, enjoying some great levels of outperformance or some very fantastic performance history, then most often the mutual fund retains the excess subscription. They do not do a pro rata allotment. Whatever investors have applied for, they get units. So why is that? Why is this difference there? This difference is primarily there because for a company, when they have received capital of this amount, they need to find a way to use that capital. Whereas in the case, because typically it would be for project expansion, growth in different markets, and so on and so forth. But in the case of mutual funds, it's investing general public money in other marketable investments. So then if they get more, the fund manager doesn't want to return that. Okay, so there is no concept of a pro rata allotment or a proportionate allotment in the case of an NFO. There is no concept of an oversubscription in the case of an NFO. Then is there a case of undersubscription? Yes. Okay, but still the company and the mutual fund can follow the undersubscription rules as devised and as designed by SEBI. So in the case of oversubscription, you find that the company can do a pro rata allotment of its shares. In the case of oversubscription for an NFO, the mutual fund normally allots all the units that the investors have subscribed for. I hope this video is helpful to you for going for the interviews at hedge fund accounting firms and investment banking. Thank you so much.